Hello everyone, and how's it going? Every time we look at Palantir's chart, there's probably one single question that pops up in our mind, or in fact several ones. Can you make money with that stock? If you have decided to search on this topic and also clicked on my video, then chances are you have decided to ask yourself the same question that many of us are asking ourselves. So hello everyone, I hope that you had an amazing day and lots of profitable trades in the market, especially with Palantir. As we know, over the past few years, we can't really rely on gainful employment anymore because the job market has seen a lot of ups and downs, especially the latter. Companies that were once considered as safe havens for those looking for good jobs have been reducing their workforces, sometimes entire offices. And it's certainly been a pretty traumatizing experience for everyone concerned. The inflation has also been eating away everything that we've been managed to save away. And, this is something that's very shocking and new for countries that used to be deflationary for as far as we can remember. So when every single source of certainty and assumption about the reality is about to just pulped away, we must use that opportunity to remember that we gotta take a step back and start working on our own financial independence. Just like in the crypto world, they said, if it's not your keys, it's not your money. Well, here, it's also like if it's not your own cash flows, it's not your wealth. In order to secure our own financial future, we gotta look at the opportunities of tomorrow and the ones that can multiply our capital exponentially, allowing us to have more money to invest later in the safer options. Essentially, we need to find a golden goose, and for many, Palantir is one of those. So, over the years, Palantir became so much more than just yet another tech stock collecting funds in exchange of promises, and very often empty promises. In fact, Palantir has become a company that plays the major role of canary down the coal mine because it has enough clout and mystery around it to arouse the market's curiosity about anything that Nasdaq really has to offer. And people's tendency to follow the trend has really been capitalized by Alex Karp as well. It is a company that people would often view equally as the risk appetite indicator of the market, alongside Tesla and Nvidia. The fact that Palantir may rise and fall with the tidal waves of risk capital is a very limited but useful prediction tool that can make it a very useful, a very good stock to keep on your short list. So in this video, we're going to take a deep dive into Palantir and see whether it deserves to have a place in your portfolio. Before the video continues, I want to take a moment to thank every single one of you for coming to my channel, and I hope that you're going to enjoy your stay and to come back for more. If you like what you see, please consider to like, subscribe, and to check out my channel for playlists of the companies I cover. With that being said, I hope that you can enjoy my analysis, and let's get started on today's topic. So, the first thing first, let's take a look at the short-term price action. The price actions tend to push towards the $20 level instead of the $30 level with additional pressure from above. And the recent attempts from March to present days have all been, so far pushed back at a pretty hard bottom, because there are many traders with $25 as their profit-taking levels, since the market is yet to take a more clearer direction. With that being said, we have to see more evidence before saying that the bearish tendencies are absolutely behind us, even if I gotta say, it starts to look like it. It's been a few days, if not a few, maybe not a few weeks yet, but maybe more than a week, that Palantir's price has been sitting above $21. And the current consensus is that the sell-off pressure has a combination of motives behind it, including the recent announcement that Palantir's growth has slowed down in the traditional public sector contracts over the course of 2023. There are also additional volatilities to be expected as the S&P 500 will rebalance in June. And many saw these news or these the absence of major catalyst as an opportunity to say, you know what, let's take a step back and in fact also take some profits from their current position with the expectation that a price action will eventually correct and then come back for a better entry point. The market reacted as a result, of course, and is still in the process of consolidating, and reconciliating between the expectation and the reality of the news landscape. It's interesting to remember that the attempts to push Palantir lower so far have failed, and the $20 level is certainly an interesting one to look at. In fact, I do believe, personally, that this might be the beginning of the recovery, as long as there's any sort of positive vibes in the market to corroborate. So, Palantir, it's quite useful to remember, is a stock made of momentum and a pretty large dose of anticipation instead of cash flows and financial results. The fact that its actual financial results are decent doesn't necessarily mean that its actual valuation is going to stay up. Because right now we're assuming that Palantir is going to become humongous in the years to come, not just to become a decent company. If it were to become a decent company, then we're going to look at other kinds of valuation models. So the resistance levels have been identified at around $25, and also like $30, where the stock is still struggling to go beyond in any sort of sustained manner, with support levels between $20 and $23. It does seem like the stock's past history provides some, and in fact a lot of choppiness and stability to whoever who wants to short sell it. These levels serve as important markers for investors, especially indicating the potential areas of price reversals later on, or in fact trend continuation, whichever way you put it. The short-term trend of Palantir stock appears to be moving sideways with a slight downward tendency. The trend can be attributed to a decrease in both interest and volume for investors. While the overall trend remains bullish, the weakening momentum does suggest a shift in the market mood. Now, on a more fundamental level, I would say that Palantir has always managed to gather a lot of interest from retail investors since its initial public offering. Now, something to say about the public interest. I feel like there are multiple reasons behind it, other than the fact that this company itself is decent, and we're going to come back to that in a second. But right now, since I've mentioned that Palantir is mostly a stock of momentum, what does that even mean? It means that the current performance does not indicate the future valuation. In fact, the future valuation will determine the current valuation, in a way. In other words, people think that Palantir is going to make their wallets great again, therefore they buy into Palantir. They think that this is going to be the next Apple, in a new age of cybersecurity and data analytics and artificial intelligence, or generative artificial intelligence. So this is why a lot of people believe that Palantir is going to be the next big thing, and it's especially true amongst the retail investors. So if anything, this might be one of the potential weaknesses of Palantir's long-term outlook, to be honest, because so far the institutional investors have yet to really own the majority of Palantir shares. That could be a sign that despite its solid business model and reliable revenue streams, Palantir may be perceived to be a little bit too expensive or speculative for the institution, like the institutional capital. This increased presence, or this majority presence of retails, can also explain why Palantir is a very reactive stock. Ever since it first began trading, people have been very emotional about it. Every time there's one single good news or one small good news about it, the stock may go through the roof, and every time the news are pretty bad for Palantir, it's really the other way around. And if anything, there's also something else that kind of is unique with Palantir, which is the following. It is very sensitive to macroeconomic news, and more so than your typical stock. And I would say that it's even more so than your typical NASDAQ stock. This is really what puts it aside, apart from the rest of the market. Of course, there are other stocks like this, like Tesla. I'm sure that it's like this. The NASDAQ ETFs, I'm sure that the QQQs, the TQQQs, the SQQQs, and so on, I'm sure that they're also like this. But it doesn't mean that, this is to say that Palantir is not a volatile stock. Very, very, very far from it. So, its journey in the stock market has been characterized by intermittent periods of very bullish enthusiasm, followed by very prolonged bearishness. And every single time, it's almost like your surrounding environment is tinted in that color, like in one color or the other. And one significant aspect of Palantir's price movement is the correlation between the fundamentals and the macroeconomic news cycles. Events like geopolitical uncertainty, supply chain issues for large economies, the interest rates decisions, or governmental regulations have been able to have a significant impact for the share price while simultaneously being affected by the company's own news. For example, the financial news, how quick its public sector revenue has been growing. In other words, how much they're billing the governments, and so on. Now, speaking of which, I would say that the angle from where we should analyze the news should be relatively limited. Like, it should definitely be taken with a bag of salt. It's often observed that news articles surrounding Palantir are very closely reflecting on the current mood instead of what's actually going on. Like the self-fulfilling prophecy scenario is very true with Palantir, at least with Palantir. So when the stock is on the up and up from a price action perspective, positive news tend to really, really dominate the headlines. And you almost feel like the entire world is bullish after Palantir. You feel like you're physically sitting on a rocket and, you're aiming to the moon. And during the downturns, every single piece from the media can be pretty bad. The CEO's eccentric attitude isn't really helping. People are dumping its shares. The insiders are selling. Is that company that's super expensive in terms of valuation, is it really a smart choice, and so on? I feel like sometimes when people write those articles, they would twist the ongoing narrative in order to arrange the current mood. Like, for example, if everyone thinks that Palantir is so great, we're going to artificially remove every single piece that says that it's not, and to go from there. Same goes for when Palantir is going down. We're going to remove every single fact that Palantir may be on its recovery, right? Not because it's true or not true, but because it doesn't fit the current narrative. For example, previously I've been saying that every time you look at Palantir, you should always remember that this company has a positive gross margin. It means that their business model, given scale, would work. Okay? Gross margin means that it costs them less to do the business, to bring the revenue in the door to begin with. Now, some companies even have negative gross margin. What does it mean? Let's say you sell cars, okay? Your first few hundred cars, it's entirely possible that because the operations are not optimized, because the company's business model might have a lot of flaws and so on. How can I put this? You basically lose more money by selling more cars. Okay, that's what's going on, and not just because you have to amortize the fixed cost. You have the variable costs that themselves are more expensive than the product itself. What does that mean? It means that the business that is brought through the door cost is valued less than the expenses that you have to shell out in order to have this business to begin with. But that's not the case with Palantir. And it's been like this for quite a while, in fact. But it didn't, really stop Palantir to be trading below 10 for quite a while. Okay? And when it went from $8 to $15, a lot of people did not see this coming. And it's normal because, if we could, we wouldn't be sitting here. I sold my position when Palantir was trading around 15 because I did not foresee that it has the capacity to hover around $20 to $25, for example. So no one is perfect. But of course, by looking at some of these aspects and by remembering that the news cycles have to cater to your own desires or your own gut feelings, which very often is inaccurate, you might have a much better picture or idea of what Palantir is truly about. So, as things currently stand, Palantir has been able to maintain its bullish trend in the medium and long term, with, of course, some slowdown and even pullbacks in the short term. It has shown a lot of resilience in the recent sessions. The pace of its ascent has certainly slowed, but the overall trend has not changed. And also, more importantly, the narrative has not really changed. The bad news, if any, if applicable, that is, were mostly priced in at the current stage. Of course, we can always have a bad surprise the next day when we get up, right? This is why in the stock market, nothing is guaranteed at 100%. However, at the moment, we can certainly say that there is no additional negative catalysts going on. Of course, investing in a company that is as big and popular as Palantir has its own ups and downs. The good parts is it's a decent company. It's a company in a pretty good niche in the sense that, the economy of tomorrow, it's probably going to use more data to make its own decisions. And what says data says companies such as Palantir. The other thing is, yeah, sure, maybe a lot of people can crunch numbers, but not every number crunchers can be, very chummy with the public sector. Not everyone has, as deep as the relationships with the governments that Palantir may have. This is much thanks to people such as Peter Thiel, then as well as Alex Karp. Okay, those people know and have a bond of trust with different levels of government agencies, and this is why it's also something that can arguably be a double-edged sword that is for now playing in its favor. I say double-edged because, the same thing can be said about the fact that Palantir is thick as thieves with public sector agencies. Not every single one of them promise you that they're going to do no evil, right? In fact, nor does Palantir. Nor does, I would argue, Alphabet these days, as well as OpenAI. But that's another story. Basically, Palantir is a much more pragmatic company compared to the Silicon Valley unicorns. With that being said, this is both good and bad because you may see this as a progress or you may see this as a regression, right? Just like some people may think that, wow, data analytics, that's so cool, man. But there are also people who would be wondering, wait a second. So we're talking about using people's data, analyzing people's data. Do they even have the permission or the right of ownership or the right to manipulate and to use those data to begin with? Is this going to trigger any sorts of contingencies In other words, lawsuits or class action lawsuits from activists or civil rights groups. For example. And right now, we're not seeing a lot of these, but sometimes you can definitely see the little sparks around. For example, when Palantir wanted to have that contract in NHS, which they ended up having, there were a lot of people worrying about, whoa, hold on a second, are we just handing them like the our medical information, right? And when it comes to the ownership of the data, they actually had a little issue, shall we say, with the U.S. military, right? They wanted to use and to keep the data, and the client said, you know what? No, it's ours, right? And I don't know if they said, you know what? It's actually national security, but it's at least a case can be made there. So the reliance on public sector is definitely a risk that Palantir needs to address. It's also a risk that anyone who wants to own Palantir has to keep in mind and to manage. The government contracts may be lucrative. They also come with a degree of uncertainty because they're subject to some political and budgetary considerations. Government agencies may decide to cut back on spending or shift their vendors. And also, what if one day AI and data analytics are no longer very popular topics in Palantir? What if it becomes, I don't know, deep space discovery, or genomics, cloning, transhumanism? Like I'm making things up, but you get the idea. There could be a lot of popular topics in the market. Not every single one of them has to be or could be capitalized by Palantir. And what if one day, just like the EVs, just like fintech some years ago, AI is no longer, the coolest kid around the block? Or if one day people start to wake up about the potential risks of privatizing data analytics. Anyway, so it's just some food for thought, and it's something to be kept in mind when evaluating if your risk profile. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflation, Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, having said all this, what is my opinion about Palantir in terms of should you buy it or not? So, having heard everything I've had to say about Palantir as a stock, as regarding its place in the world, at this point, you should start making some assumptions about one, do you believe that the sector is going to remain relevant? And two, is that the kind of risk profile for you? Some people even think that, even savings account are too risky in the sense that how for every savings account or even your bank deposit, they're guaranteed or insured up to a certain point. I think that like the institution is called FDIC, and above that they would switch bank. So there are people like that, and then there are people who only want to ape into different kind of penny stocks. Of course, most people are somewhere in between. So in my case, I do believe, like I have enough faith to think that Palantir is going to be here to stay, and decades from now, the trends that are, or the topics that are currently popular are at least going to remain relevant. Okay, it doesn't mean that they're going to be as popular as they are now, but it could also mean that they're going to be a lot bigger than where they are now. So overall, I would say that Palantir is a decent stock to be had. The current price level seems to indicate that the sell-off is finishing. So I would say that if you have any sort of capital laying around, the maximum allocation should be about 8 to 10% of your portfolio, by the way. And if you have any sort of free capital laying around, you may start considering for an entry. But just an entry, like a small entry, not something large, not something that's going to tip over the balance of your portfolio. But I would say that over the years, if you have 8 to 10% in Palantir, it might be an interesting, position to be had.